Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 8:06 here in the middle part of the country on Tuesday. It's June 22nd, 2021. Here's your morning jog around the economic headlines of the world. Bitcoin down 8% today, down below $30,000 a coin. Crypto continues to tumble. We saw Doge down 35+% yesterday. We've seen Ether down. The entire index is down about 11 or 12%. Of course, if you're a long-term commodity bull, could be some time to pick up some coins as they're at a little bit of a discount. On a longer-term basis, if you're looking at the technicals, we're seeing some bad crosses. We're seeing the 50-day average move below the 200-day moving average. That's not a good sign. Typically, that is a very bearish signal from a technical perspective. One of the things to always keep in mind, assets, crypto, land, stocks, they all have different volatilities, but they always typically have the same golden ratio when it comes to up versus down movements. That ratio is about 7-to-1, i.e. stocks move down, commodities move down, crypto moves down about 7 times faster than they move up. Now, they have different volatilities, but that's just sort of a general rule between up and down action. That's actually priced in options markets as well. Why is that a pattern? Well, it's fear aversion. Folks typically have their mood altered more by taking a loss than getting a gain. So if you have some crypto assets and don't have some volatility protection measures on the downside, it's a really volatile asset on the upside, extremely volatile asset on the downside. Please do be careful if you're trading in those markets. Of course, we don't have any sort of crypto exposure in our portfolios here at Exencial, but it's important to keep an eye on as we go forward. G20 has agreed on a global minimum corporate tax deal. That's a big deal. Remember, we talked about a couple of weeks ago the G7 adopting a similar policy. G7, of course, sort of a small conclave, 7 most powerful countries in the world, US, UK, France, among others. Now, we've got the G20 on board, adding 13 additional countries. They're going to make it official. It looks like July 9th through 10th. They're going to make that deal official to set a global minimum corporate tax rate. It's probably about 15%, maybe 18%. On a go-forward basis, of course, we'll see if Ireland gets on board, if the Caribbean islands get on board. Of course, these are their big competitive advantages, is really just being a tax haven for large corporate multinationals. Think Facebook, think Apple, think Google, all taking profits from countries like the US, where they make them, domiciling in Ireland, doing Dutch flips, etc., taking that intellectual property, taking those profits and moving them offshore so they're taxed less. Of course, for a shareholder, you'd okay with them being taxed less, right? Because then they have more capital to go invest and eventually pay dividends back to you. On the downside, it means that they're making money in a country and not really paying their share of taxes when they make money, like, for example, a construction company or a lumber store, right? If you sell lumber in the US, you have to pay corporate taxes if you make a profit. If you sell ads in the US, like your Google, you don't. So that's sort of unfair. On a go-forward basis, it will be interesting to see if we see this global minimum tax take shape. Good for the countries, they need the revenue. Bad for the stakeholders. FANG, bad for tech stocks. On a go-forward basis, one more thing before we get you off to a nice Tuesday. Sanderson Farms is exploring a sale. Looks like Continental Grain is the key bidder in the sale. Of course, anytime we see commodities up, we've seen chicken up about 20%. It's actually one of the less crazy commodities. Lumber's been up a ton. We've got iron ore. We've got lots of commodities up a ton. Anytime you start to see large players selling, looking for sales and assets divestitures, that's sort of a top-ish signal, right? These folks who've been running Sanderson Farms have been in the chicken business for 20, 30 odd years. They know what they're doing. They know what the prices of their inputs are. They know what the prices of their outputs are. They're saying, hey, this might be a good time to ring the register and incorporate it into a larger organization. Of course, they had made record profits this year, $96 million last year, $6 million just in Q2. Hey, that's a tremendous increase. You're starting to ring the register and make record profits, and you want to sell. Could be a little bit of a top-ish signal if we see additional commodities companies come to the forefront with this sort of a deal. could be a good time to reduce a little bit of our exposure. Of course, we own commodities just as an inflation hedge. If you want some additional information throughout the week, feel free to follow me on Twitter. As always, it's OKC CFA CFP. Until then, hope you have a good Tuesday. I am out.